All right. Hey, everybody. Welcome to August 11th's Maker Community Call. My name is David Utrobin. I work at the Maker Foundation doing community development. What does that mean, you might ask? It's project management, it's educational resources, it's working with the community to basically help MakerDAO grow and turn into the decentralized protocol that we all envision it to be. Welcome to the community call. If you haven't been here before, just to give you an idea of what we use the call for, we use it kind of in a few ways. So we go over the week in MakerDAO, what's been happening with regards to governance, with regards to I guess maker improvement proposals are part of governance. We do community highlights. We mention partner integrations, we pretty much talk about a lot of just current events. And then secondarily, we also like to have guests on the call. So anytime there's an interesting hackathon going on, or an interesting DAI implementation happens, or something that the smart contracts team might be cooking up is coming to fruition, we like to invite them to the call and do a bit of a demo, and then an open Q&A session. So these calls happen every Tuesday afternoon Eastern Standard Time. This week is going to be a little bit slower. It's a lazy Tuesday afternoon here in mid-August of 2020. But I'm really excited because my workload got slightly lighter because we have a working group in the community who's focused on governance communications, and one of their tasks is to try to aggregate all of the information that I used to put together every Monday and put it out kind of as a weekly stakeholder newsletter called Maker Relay. And if you're watching the recording, you could check out a link to the Maker Relay in the description. If you are here on the call, there's a little call to action button right under my face, like right there. And it should be pointing to episode 7. So if you want to follow along and click through to any links that you might be interested in, you can check out episode 7 down below. And that was released last night. Every week this team puts it together, and they're also looking for feedback. So if you scroll to the very bottom of the Maker Relay, there's a little survey link. If you have anything pops out at you as like a obvious mistake, or you wish that some extra information was there that's like not usually there, definitely send them your feedback. They will greatly appreciate it, and likewise, I'm sure everybody else who reads the relay will also appreciate it, because God knows there's like, for every one person that speaks up, you know that there's like 6 people that might have thought the same thing but didn't speak up. So feedback is a gift, and we appreciate yours. So yeah. This call is going to be pretty simple. We don't have a guest lined up. We're just going to be going through episode 7, just kind of reviewing what's been happening in the Maker universe for this week. I am, to make it a little bit more entertaining and visual for you all, I'm going to just share my screen so you aren't just watching me do a monologue. And likewise, anybody on the call, there is a ask a question button down below. There's also a chat box, so definitely feel free to ask your questions. I'd happily invite anybody on screen if you guys want to have a conversation about a given topic, or if somebody more versed than me in certain things can help elaborate or explain. I know I definitely call upon like Brian sometimes, and even Ed sometimes to help me explain some stuff that I haven't fully wrapped my head around yet. But nevertheless, let's kick it off. So yeah, Maker Relay 7, 16 hours ago. So let's do what we usually do. We're going to go through what's been happening with votes. So right now it is August 11th, and for this first week of August, can I say first week? Yeah, I guess I can't say first week. Yeah, so for this first week of August, there were a couple of executive votes. both of which passed, and it's my understanding, yeah, that as of right now, Tuesday afternoon, there are no outstanding executives waiting to be passed. But these are the two that passed. So the first one was this urgent configuration change to the ETH-A lump size, and also it was paired with an increase in the WBTC-A debt ceiling. So what this did was it decreased the auction parameter lump down from 500 ETH to 100 ETH. This is basically to minimize like a liquidity constraint, and also just it's a better. I'm not going to try to butcher all the reasoning for it, but the idea is that it's just a bit healthier to have that lump size be 100 ETH as opposed to 500 ETH. And then likewise, in the same vote, the debt ceiling was meant to be increased from 40 million to 80 million, but unfortunately there was a mistake in the executive vote, and instead of putting it up to 80 million, it actually put it up to a decimal point that was very, 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 very close to zero, and temporarily for some part of the day, the debt ceiling was put to zero, which doesn't mean that people like got kicked out of their vaults or anything. It was thankfully a pretty harmless mistake that got remedied pretty quickly, because the second executive that happened this week was right after that, and it was to fix the WBTC-A debt ceiling. And if you're curious about kind of what went wrong, like the details, what's the difference between RAD and WAD, for example, you could check out the discussion there. I think Mariano Conti explained it pretty well. But besides that, I think also, mistakes are obviously like not fun to deal with ever. And I know that as a part of this remedy, Mariano assured the community that there's going to be more checks in place to check any spells that are going out. And just a note on jargon: a spell is you can think of it as synonymous with like executive vote. I'm not going to get into the too technical details of what the spell is. Yeah, so that's about it for executive votes. Pretty simple. There's a awesome amount of stuff happening in the governance polls this week. There's our regular base rate adjustment vote, which is currently it ends on Thursday afternoon Eastern Standard Time, and currently the winning vote is -6%. So if you've been following for the last, oh no, I didn't mean to click that. If you've been following for the last few weeks, oh no, you will know that last week, I believe, or the week before, the base rate adjustment was tuned down from 0 to -4. And the Maker protocol doesn't support negative stability fees, but what it did was for any vault that has a positive over 0 stability fee, it basically adjusted it down by 4%. So I think like a good example of that is the USDCB facility, which is a overflow facility. It's a secondary vault that isn't really meant to be used except only for short term and primarily by keepers, just to access extra DAI liquidity. That's why the stability fee is originally set to 50%, but with the -4% base rate, you could see it adjusted down to 46% as the real rate. And so yeah, and right now -6 is winning. There is some disagreement in the community about what to do with this base rate. I think that people are a little concerned that if we adjust it even further down in the negative direction, then it will cause us to be less agile when wanting to adjust it upward. If the DAI peg, for example, starts trading below peg, which would be for some of us kind of a really great thing. But either way, yeah, there is an interesting amount of discussion happening, but there's actually not like a dedicated discussion thread about it. I think mostly it's been happening in the chats, which is interesting. Somebody in the community should totally spin one up. Besides the regular base rate adjustment, there's a number of system parameter polls. There is an adjustment to the ETH-A risk premium. Basically, since this base rate adjustment vote went down, and everything is kind of like almost at zero, as you could see. The community is taking this as an opportunity to adjust risk premiums, and I think this is kind of the first experiment with that. So this is a vote to increase it from 0 to 4%, which is a little bit more in line with assets of similar types. So check it out. There's also a discussion thread linked here in the Maker Relay for your convenience. Besides that, there's also a vote to adjust the dust parameter. What the dust parameter is basically for any given vault that you open, you're able. It's kind of like the minimum amount of DAI you're able to generate. So currently, the dust amount is set to 20, and that's because anything really less than that, I mean, it's like prohibitive. It's prohibitive for liquidators to actually liquidate that vault, even though it's a small amount. If that vault becomes under collateralized, it'll actually cost the liquidator money, and they will not have an ability to actually profit off of the liquidation, and so thereby they're not really incentivized to do the liquidation. So having a dust parameter that is too low has a risk of causing kind of spam vaults or a lot of vaults with little DAI generated amounts, which then in turn, if they're not liquidated, if they do become under collateralized, can result in bad debt in the system or under collateralized DAI. So it's not like a huge terrible thing, but this vote is basically to adjust the dust parameter upward from 20 to 100 DAI. And if you are a regular Ethereum user, you will know why, because gas prices for the last month or 2 or 3 have been kind of crazy. And so yeah, it surprisingly though, this vote is actually currently losing. Uh, uh, yeah, Ednopal mentioned, as well as ETH prices, exactly. And so this vote is actually losing 17,000 MKR voting no for it, which is a little bit surprising to me. And I think a few people in chat also mentioned that it was surprising to them because it seems like such a no-brainer. But regardless, if you are the no voter, we would love to hear kind of your reasoning in the signal request thread. That would be wonderfully helpful. The third vote, and sorry, I have a little bit of a little stuff in my throat. Yeah, so number 3 is a vote to increase the surplus auction buffer. And if you are curious what the surplus auction buffer is, I will show you. So the system surplus is kind of like a running balance sheet item of like, it has net inflows and net outflows. DSR is paid out of it. Stability fees accrue to it. Liquidation fees accrue to it. And so the surplus buffer is kind of the maximum amount that this line item can get to before it starts triggering MKR, surplus auctions. So right now it's currently set to 500,000 with a surplus lot size of like 10,000. So what that means is once this number hits 510,000, 10,000 DAI is taken from this balance and it's used to launch a where is it at? It was gonna flop where is it? Where is it? DAI surplus? Oh no, I guess since the auction contracts changed, these got reset. Wow, that's funny. I was looking for a number and I didn't realize this was 0. Yeah, so actually, so surplus auctions have happened in the past. And so basically what would happen is that 10,000 is used to purchase MKR through an auction, and then that MKR is burned. And so the vote that's happening now is to increase that surplus auction buffer, this 500,000 number, up to 2 million, given the reality of this like huge increase in the scale of the Maker protocol. And yeah, so it kind of acts as almost like the float for the Maker protocol. That's I guess a cool a close analogy. But either way, pretty good reasoning for doing it. Definitely read up on the signal request thread if you're curious. But yeah, go out and vote. As for Maker improvement proposal polling, there are 5 votes related to MIPS one which is actually I'm really excited for is Liquidations 1.2. And this is coming off of what happened in March of this year, when ETH tanked to $80, and there was a huge issue with the Maker Protocol liquidation system, and this whole scandal with the zero bid auctions, and the protocol lost a ton of money, and unfortunately, had to actually. Well, it's really. I'm actually kind of thankful in hindsight that that happened, because we got to see a very foundational design part of the system's design come into action. So we were like $5.6 million with like negative system surplus, and I believe around 15 to 17,000 MKR was minted and auctioned to cover this deficit. And so at the start of the project, MKR supply was actually 1 million, and then I think it got as low as like 985,000, but now it's back up as a result of March 12th. And so, with the need for a far more robust liquidation system, we are gradually stepping towards that reality. And what Liquidations 1.2 does is really cool. It's actually it, and correct me if I'm wrong, Brian and Ed. It puts a limit to the maximum amount of DAI that could be used at auctions at a given time. So what this does is it gives maker governance far more like granular control over how liquidations are structured, and likewise, it's kind of this additional. It's this additional property for the liquidation system to make it way more robust and not get overloaded with too many auctions at once. And likewise, it gives maker governance the ability to pace liquidations in a way that helps like the liquidity situation in a time like that. I'm kind of butchering it, but the proposal itself it goes very in depth. It's literally like if you read it out loud, it's like a 10-minute read. Actually, it's like a 5-minute read. Who am I kidding? But yeah, definitely read it. My favorite part about this is the new litter box system variables. I find that hilarious because the liquidation contract is called cat, and flipper is like the auction contract. So in line with maker lore, litter box is a wonderful addition to our lexicon of code. So I'm yeah, kind of an inside maker joke there. So yeah, read through it, check it out. This is just one more step closer to Liquidations 2.0, which is a far greater upgrade to the system, kind of on a longer roadmap. But nevertheless, we are growing now, so it is important to implement solutions now if we can. And I think this is a part of that effort. There's a few sub-proposals as well. MIP 13 is this MIP that was recently passed, I think in the first or second governance cycle, called the Declaration of Intent. This idea is basically if MKR voters pass whatever sub-proposals they pass, and I'll get into this sub-proposal in a second, that's kind of just a signal, and it kind of, I don't want to say like it depends really on the sub-proposal, because this one says it's non-binding if you check out the language in it, but some of them might be binding. But this one, basically, I guess I'll talk about it. It is a sub-proposal to do two things. So the MakerDAO community will enact a working group titled Vault Holder Advocacy Group, led by this proposal's author, who's Akiva Dubrovsky, to identify particular factors that would result in changes to risk premia and other risk parameters, thereby providing forward guidance to vault users on the parameters attached to their vault. And so, yeah, and in light of concerns vault holders have regarding transparency of parameters, MakerDAO intends to seriously consider the general guidelines of the working group after it has submitted its results. So the idea is that, in Maker governance, MKR holders are represented, obviously. Vault holders, not so much, unless the vault holders themselves are MKR holders. But the idea is that since there's variable stability fees, variable DSR, there's variable parameters in the Maker system, this intent is to create this vault holder advocacy group that can try to set better kind of standards for Maker governance around changing changing and kind of communicating around parameter changes. Yeah, the details, the deeper details are kind of I'll leave to Akiva to spell out in the future, but nevertheless, kind of an important community represented group to appeal to Maker governance a little bit more formally, which is pretty cool to see. So that's what that is. We also have a MIPS 0 sub-proposal. This one is a tinge of sad. It's a sub proposal for offboarding Richard Brown as the governance facilitator. He was the first governance facilitator. He tested the role. He really kind of paved the way for Long for Wisdom to get elected and become the first official like community governance facilitator, since Rich Brown was a foundation employee. But recently, Rich Brown felt that his mandate was completed and stepped down for a break, and so he actually has left the foundation and has left it in great hands and is taking a more backseat role. And you can actually see from the notes on previous governance call that he does hopefully intend to be a community member and stick his head around and give us some of his magic. So this one is bittersweet, but nevertheless necessary. It's a bit of a formality, but yeah, he is being offboarded as the governance facilitator. And then we have MIP 12 subproposal for actually onboarding LRC, which is Loopring's token, into a vault type. So if this passes, currently it's in the inclusion poll stage. Next week it will go to a governance poll stage, and then the last week of August it will be actually, if it passes the executive, it will be implemented as the newest vault in the Maker protocol for the end of this month. So if you check it out, there's a huge amount of work that has been done. Every single collateral that's onboarded into the Maker protocol kind of requires a number of different assessments, a risk evaluation, a smart contract team assessment, and then also an Oracle team assessment. So if you're curious about the parameters that are being proposed, you can check out Cyrus's and his team's risk evaluation. I don't know why it doesn't load that. See, it loads quickly like that. But here are the proposed parameters. It's a pretty small debt ceiling. It's about 3 million. Risk premium set to 3%. Liquidation ratio slightly larger than other vaults. Do they actually? I don't think they listed here. Oh, never mind. Most of the other vaults are 150, but yeah, either way, they're all unique. You should don't generalize like I do. Bad, David. Yeah, 175% liquidation ratio, and yeah, basically all these. I'm not going to read them individually. If you're curious about Loopring, also as part of these evaluations, you can get a really great succinct summary of what it is, like what the proposed token value is, and then all these different awesome metrics and analysis around the token. So like daily active addresses, on-chain transaction volume, holder distribution, like kind of all this really really great, lovely, high quality work from the risk team, which makes my heart tingle every time I see it. So check it out if you're an MKR voter. It's pretty cool to see this coming on. And just a side note, I believe that there are, actually I think I'm going to get this to this in the MIP update, but I believe that there's Pax USD and another stablecoin that are meant to also be onboarded as collateral this month, but they're going to be going through a weekly governance cycle rather than the monthly governance cycle, for reasons that I currently don't know, but there are good reasons, I assure you. But yeah, that's that. And then lastly is the inclusion poll for appointing MyCrypto as an Oracle Lite feed, which is pretty standard. I think this will be number 26 or 27. So we will have, I think, 26 or 27 different feeds feeding the oracles in the Maker protocol, which is really great because the more we have, the more decentralized we are, and the better the oracles are, and the harder it is to attack them. So this is really cool. That's about it for votes. If you have any questions, feel free to type in the chat, of course. There's a couple of open signal requests. Should we change the risk premiums for various collateral types? And I kind of mentioned this already a little earlier. This is in line with this idea that since everything's kind of zeroed out right now because of the negative base rate, this is a good time for us to do like real risk premiums, right? And then when we eventually put the base rate back up, then each vault will actually represent a good reflection of the real risk profile that that the evaluation kind of points to. There's also an open signal request about adding a DAI flash mint module. This is a really interesting idea for a number of reasons. There's apparently only one con, but I'm sure we can think up some more cons because DeFi is DeFi, but yeah, it improves market efficiencies, democratization of arbitrage. People can participate in auctions without needing like a ton of like DAI liquidity from the offset. Yeah, fees provide an income source for the protocol. Yeah, there's a number of interesting things about this idea. Of course, this is just a signal request. There is quite a lot of thinking and developing to do around this idea, but nevertheless, all things are possible, and it's cool to see this conversation beginning. All right, so now I'm going to launch into the MIPS updates. Charles posts a really, really, really lovely weekly MIPS update every Monday. He's done it 11 times so far. But here, I guess I'll kind of go through the Maker Relay one, and then I think he had a couple of special notes like down here, yeah, that I'll cover in a sec. So yeah, the MIPS update. Yeah, there's a number of proposals that are still in the request for comments phase that are being prepared to be entering into the governance cycles in the future. There is MIP, I guess I'll go bottom up. Let's go MIP 14, Protocol DAI Transfers. So this is a MIP that outlines the process for the Maker protocol, well, the Maker governance, being able to transfer DAI to a given Ethereum address through the Maker protocol. So this is going to be a foundational piece of the whole self-sustaining MakerDAO vision because, there's a ton of expenses associated with the Maker protocol, and eventually the protocol will be running itself. How will it pay risk teams? How will it pay Oracle team? The Oracle team. Well, actually, there's nuance there because hopefully oracles will be self-sustaining in their own right, but nevertheless, how do you pay advocacy groups that you intend to fund? How do you pay? I don't know, a number of different things, but it's important to kind of get this piece of the puzzle right, and I commend the community for taking their time with it. So definitely come and share your feedback or insights if you have ideas about this. MIP 15 is the process around the dark spell mechanism, and so this is the idea that if there is a bug in the system, we can't. It's not so simple to just put out a fix because there is something in the Maker protocol called the governance security module. And what the governance security module does is any governance action, it actually delays it for a set number of hours. I believe that number is 12 hours right now. I might be wrong, but I'm pretty sure it's 12. What this does basically is it outlines the method for submitting bug fixes despite there being a governance security delay via the module. And so, yeah, there's kind of a lot to unpack, and Will Barnes has been spearheading this MIP and has done a number of presentations in the past, and actually I highly suggest if you are interested in what a dark fix is, what a dark spell is, you can look up dark fix and dark spell actually, and then you can check out the tag, and you'll see there any governance calls that happened with it, they've been tagged. So if you like check out the governance call, you'll see how it was 3 clicks, and I can easily get to his most recent presentation about it. And so he's done a great job outlining the proposal, outlining the details for the community to review. Highly suggest you check that out. So feedback ends in August, and it will be eligible for the September governance cycle. So looking forward to that next month, hopefully. Moving up, we have MIPS 17, which is the weekly actual debt ceiling adjustments. I think it's actually the title is a little bit more than that. It's also, oh no, let's go back up. Yeah, so it's actual debt ceiling and actual risk premium adjustments. It's a little wordy, but there's good reason for it. This kind of outlines the logic behind like when we should change the debt ceilings, when we should change the risk premium, because if you've been following Maker Governance basically for the last few months, you'll know that a lot of governance's changes are very reactionary to the outside environment. You know, we're raising debt ceilings because DAI is above peg. You know, we're dropping risk premium. Well, we're dropping base rates because DAI is above peg, and kind of these this MIP, which I think there might be another call to discuss it coming up, but this MIP talks a bit about just the logic on how to modify things securely, and to do it in a way that kind of isn't a surprise when it happens. I'm doing kind of poor job at explaining this MIP, so I should probably reread it. So just excuse me. I'll probably come back to it next week. Either way, it's in the works. I know that they wanted to get it in for this month, but it's still in the RFC phase. And then MIP 20, the target price adjustment module, Vox. So Lev, also known as I forget, actually, I can't remember his form name. Yeah, Equevrel. Yeah, Lev put this up. It's a target price adjustment module. If you're thinking of the TRFM, it's kind of a similar idea. So Lev, and actually one of the legendary like old school maker devs, Rain, put this together. And it provides a smart contract implementation of the Vox, which is a module that adjusts the target price of DAI according to a governance-defined rate. And practically speaking, what it allows is the institution of like a real negative effective interest rate. I guess real and effective is like kind of, just negative effective interest rate. And so if you're interested in kind of how this works, read through it. There's also a really good intro to the actually, if you just type in TRFM into the forums, I think the first thing that pops up is Kurt's introduction to the target rate feedback mechanism. This was the original idea behind Vox, and so if you're curious about it, read up. And I think he did some presentation about it in the past as well. All right, moving forward. So the governance cycle, we're in the August governance cycle right now. So we're not going to go back up there. Some domain team updates just from smart contracts. Mariano explained kind of what happened, the bug on Saturday's executive. I mentioned it here, but feel free to check this out for an explanation of what went wrong. They're going to be revising and adding more tests so it doesn't happen again. I think that's about it for that. So now we're going to get into this cool section in the Maker Relay that I'm glad they named Current Events. And the members on the working group, Scott, Seth, Tim, Anna, they've been doing great to put together these little like blurbs kind of giving a little bit of context and explanation. Oh no, I didn't mean to click that. A little bit of context and explanation around each one of these, like, oh no, I'm scrolling way too much up here. Yeah, there I am. So yeah, they do really great to kind of give a little blurb to give you a taste of what this is about, each subtopic. So there's a few things going on this week. Vault compensation update. There was a V2 of the proposal that was submitted by the Vault Compensation Working Group. The first Vault compensation plan failed to pass by a vote of 25,000 against 17,000. And so this revised compensation plan incorporates the feedback. And so I'm not going to get into all the details here right now. Actually, this might be interesting. I'm actually not sure if they're on schedule to present about the revisions, but regardless, Monet did a fantastic job, kind of very clearly outlining what is going on with this. So if you're an MKR voter and this is important to you, then please read through it, give more feedback, and yeah, that's that. Yeah, it breaks down the updates in the compensation plan. Yeah, lays out the financial plans for funding and discussing some operating expenses, and then the compensation that. Oh yeah, there's this idea that compensation will be distributed to vaults will be an MKR instead of DAI, and I think that there's like a lot of kind of back and forth about this idea, and just it needs to be refined a bit more. But yeah, completeness, fairness, consensus, simplicity, economic soundness. That's the goal of the working group of vault compensation of this. This working group that's putting together this plan. These are their values, and I really respect that just as a person. So good on them. All right, liquidations 1.2. I already talked about this, so I'm gonna skip over it. But feel free to check it out. Yeah, this is kind of important. Yeah, if there was a price crash right now, there would not be really enough liquidity available to manage a large amount of auctions. So this upgrade helps with that for sure. The PSM. So this was a big topic of discussion for the last couple of months, but it has come somewhat to not an end, but more like a pause. So yeah, I guess let me kind of just get through this. So yeah, they do continue. There's a Maker Forum deep dive. I don't know. Oh yeah, this is last week's Maker Relay. Never mind. Yeah, so I'm trying to remember if thoughts on the peg and a fundamental problem with the current stability fee design. Yeah, so this is kind of just an aggregation of a bunch of different thoughts around the PSM. Yeah, I think I gotta go back to the team with some feedback about this section. Yeah, well, either way, kind of the big update with the PSM is that, and actually, maybe I could pull it up. I hope it comes up in the search really easily, but yeah, here it is. So this is the post that I was looking for. So from the side of the foundation, Rune posted this forum thread, and I could actually just link it here since it's not in the relay. Yeah, so the concept is very interesting. I'm gonna TLDR this like super quick, but the concept is interesting, but the foundation, yeah, I guess I'm just gonna go through his points here, so it's easier, so I don't have to butcher it. So there's a number of factors that have pushed back against the PSM concept being urgently implemented. So the community voted against rapidly onboarding a PSM, instead choosing to allow more time for discussion and understanding of the risks. The impact of yield farming on the DAI peg turned out not to be as severe as some had predicted, and DAI generation started picking up, hence DAI being at over 400 million right now. And then a lot of forum posts suggesting different variations, indicating that it might make sense to do a deeper review of the core idea and the crypto economic implications of different design variations. All of these kind of led to the foundation saying, yeah, like we're not gonna do it. We don't, we're not the only people that can build for the protocol. Anybody in the community can, just as Lev and Rain, for example, are proposing Vox. Anybody in the community can likewise propose a PSM implementation, but from the perspective of the foundation, yeah, we're not going to prioritize it. Instead, our key short-term priority is accelerating the liquidation redesign. So basically, yeah, that's kind of the gist on that. So if you have any questions, feel free to ask. Lowering the base rate is another thing. Yeah, last week is now at negative 4%. And again, despite this accommodative monetary policy, we have yet to see much improvement in the PEG or additional utilization of available debt ceilings. Yeah, and this is kind of interesting because from Maker Governance's perspective, our lowering of the base rate, our being Maker Governance, I'm just speaking as a Maker token holder who votes. Yeah, it's kind of important to send the signal that governance will do anything that it can to defend the DAI peg, and the DAI peg has been trading above $1. And even though lowering the base rate has not had too much of an impact, it has had some impact, and there's definitely a ton of DAI outstanding, and it's kind of a signal. It's more of I guess it's more of like a signal to the general public that the Maker protocol will do everything in its power to defend the peg. And I think right now is a great example because there's 420 million DAI, and MKR risk compensation is like very very low, 46% on $5,000. So MKR holders are subsidizing the cost of the risk in favor of kind of to support the DAI peg. So I hope that's a good signal. I mean, I think that's a very good signal in general. But of course, there's a lot of discussion about what more effective tools might be to help, which is kind of the reason why the PSM was a huge conversation piece for the last month or two. Yeah, other current events, real world assets in the Maker protocol. There is a really great thread that I believe Greg posted last week. Him giving his initial thoughts and some questions for including real world assets in the Maker protocol. Definitely check it out. There's definitely some dependencies and there's some complexities with real world assets. But if you don't know about, for example, Fluidity Factora or Tinlake, they've been doing really interesting stuff with real world assets. And likewise, we hope to see this whole side of DeFi explode in the coming years. So this is just some an initial dive into the subject. Yeah, and I'm not gonna read through it. I'll leave it to you guys to read through it. But yeah, so check that out. Yeah, and I guess as part of this new format where I go through Maker Relay, they add State of the Peg down here, which I kind of have been really wanting to talk about on the community call for a long time, but for some reason I just never really thought to add it to the agenda, which is bad on me, but good now that it's here. So as you can see, DAI peg is still hovering slightly above, I believe. This $1.16 is a 7-day volume weighted average price. If not, it might be like a 3-day or 1-day. Yeah, I guess you could see the 24-hour average price by the line that's like behind all the bubbles. Never mind. Yeah, so for an in-depth breakdown of the DAI price premium, check out the last governance and risk summary. Or the whole episode. Sorry, let me just close that. Didn't mean to open it so quickly. But check it out. Vishesh does an amazing job every week, kind of going through the nuances of the DAI peg. Yeah, above 400 million DAI with definitely more room to grow. Here's kind of the live picture. We still have 40 million on the DAI debt ceiling that's unused. There's another, it's about 50% utilization here. There's definitely 3 times more room for USDCA to be minted. WBTCA has been really hot. We just recently raised the debt ceiling to 80 million, so we've been steady climbing there. That's cool. And yeah, I mean, you guys can see the picture. The rest are pretty inconsequential. There's only like 60, 50, 170,000, nothing on TUSD. So yeah, really cool to see DAI growth exploding. Yeah, volume at around 86 million for the past 7 days across these particular exchanges. There might be more DAI volume, of course, but this is kind of just a proxy. The average volume weighted average, this is redundant. Volume weighted average price places DAI at, yeah, it's the 7 day, at $1 and 0.16, which is still above peg. It's been consistently above 1 for about 4 months now. These are really great graphs as well. These kind of show, I think this is specifically for ETH A vaults, but it shows the amount of debt, and then the collateral is this the collateralization ratio? No, I think this is the collateral. Yeah, so this is like 0.1 ETH locked, 1 ETH locked, 10 ETH locked. Yeah, so you could see kind of a nice bar graph. And also on the right side, you could see the different buckets of collateralization ratios. So there's 500%, those are like really safe vaults. These are high risk vaults, and as you can see, the majority of the ETH vaults are between this 200 and 250 mark right now, which is interesting. ETH vaults collateralization distributing toward higher collateralization bands. The majority of the debt outstanding is still, yeah, 150 to 300,000 buckets. Some of the larger vaults have pushed the 300% bucket up significantly. Yeah, if you look at this chart right here, you could see kind of what the liquidation prices are for all of these ETH vaults. And so the first major one is sitting at $285, and if that hits, and obviously, like, you know, because the Maker protocol is very flexible in terms of user experience, like if you're a vault holder, you could always add collateral, you could pay back DAI. So as you approach $285, this wall will change because surely a number of people from this liquidation price point will adjust their vaults. But nevertheless, if like we were to flash crash to 285, that would be a 32 million DAI liquidation, which is crazy to say is only like 6% of the total supply or something like that. Just doing back of the napkin math there. The second significant liquidation wall is at 242, which is like 66 million, which is a lot. WBTC collateralization is much riskier, with the majority in the 150 to 200% bucket. Also, the fact that there's like way fewer actual users of WBTC vaults. They just have way larger vaults. Yeah, so there's that. And then yeah, an 18% price drop in Bitcoin would coincide with a 46 million DAI getting liquidated from the WBTC vaults. Which I don't know if we've seen any WBTC liquidations. I think no, we haven't, which is interesting. Usually there's like somebody tests them at least once, but yeah, I guess there hasn't been any. And hopefully there won't be. But yeah, if you're curious about these graphs, you could check out DAI.decipher.io. That's for the volume weighted average price graphs and the DAI peg. And then likewise, there's some other tools, but they're not here, so I'm gonna skip over those. All right, cool. Community articles and thought pieces. Yeah, cool. So Maker Governance Review, July 2020. This was released by, I believe, the Maker blog. They're doing like a monthly governance roundup. This is good if you're not like a weekly active Maker voter, but you're just like, you know, somebody who wants to keep up to date month to month with the system. Yeah, Kim, Guy, and the blog writing team have just been knocking this thing out of the park. So definitely check that out. Ethereum emission debate sparked by MakerDAO developer Marc-Andre Dumas' script. Yeah, this is the whole how much ETH supply is there. Kind of funny that Mark kickstarted that whole drama. A really awesome analytics dashboard for the Maker protocol. So I believe this is Sam's doing. Yeah, I posted Sam's. I posted it there. But yeah, Sam has been working on this really great analytics dashboard. It's pretty cool. You can like switch by vault type. There's a ton of really interesting, WBTC down here. It says it synced like 18 days ago, but I think that might be wrong. But regardless, there might be a few bugs here and there. But regardless, we're seeing some cool stuff happening. Videos and podcasts. Friday brunch number 3. It was a focus on user experience and design as a key tool to foster DeFi. This was led by our very own community lead Maria from Europe, and she's been doing these kind of. I think she does them once a month. Yeah, I'm pretty sure they're once a month, but I'll get back to you guys on that. Maker Forum deep dive. Bidding costs for liquidation auctions. Castleloy opens a dialogue on the costs of participating as a keeper in the auction process and the relationship between keepers and fluidity of liquidation auctions. And then this is a guide. Oh yeah, and then wait, who posted this? I think it was Elijah, right? Yeah, Elijah. It'd be Fit Sandpiper. Elijah has been a really, really active community member. He recently has done a few of these smart contract domain assessments, and he decided to write a little guide and post a template, which is pretty useful for future smart contract domain teams to do assessments with. Yeah, just a highlight from Twitter. The whole "what is ETH supply" thing is silly. Yeah, I'm not gonna get into that, but yeah, it's pretty silly. And yeah, if you're interested, just scroll to the bottom of this Maker Relay. There's a ton of really great community events and community calls happening. Some hackathons happening. Happening. I thought that happened because past tense. But cool. And then at the bottom there's some reference links. If you have any feedback, again, throw us the survey. But I believe I will pretty much concluded there. If anybody on the call has any idea for anything I've missed, definitely put it in the chat. If you have any questions, feel free to put it in the chat. We have about 5 minutes left in the call. I'm happy to stick around and talk with you all, but in general, that was a wrap for today. And I hope this was valuable to you, and likewise, always looking for feedback. So thank you all. And I'm just going to hang around here for a few minutes and read the chat box. So if anybody... Yeah, I already said that, so I'll stop saying it. All right, cool. I think I'm just going to end the broadcast. Yeah, thanks, Brian. All right, cheers, everybody. Happy Tuesday. I hope you have a wonderful Wednesday, too. And probably a good Thursday.